Stocks trade steady with small gains as higher tariffs on steel and aluminum kick in, but progress on a trade deal offers hope. IT and auto gain, while realty and oil and gas drag.
The street is seeing a frenzy of block deals with big trades in Aditya Birla Fashion, Alchem Labs, Indegene and Tata Tech coming on the back of 5 trades yesterday, including in Ola Electric, Yes Bank and Vodafone Idea.
Sun Pharma Advanced Research, or SPARC as we know it, slumps after one of its key advanced molecules fails to meet primary endpoints in its phase 2 trial. The company discontinues this development.
Morgan Stanley's MD and Chief Equity Strategist for India, Rhythm Desai, says stocks in India are cheap given the economy's growth potential. He adds that corporate earnings are only halfway through the upcycle.
Elon Musk can't stand it anymore. He calls the massive, outrageous, pork-filled congressional spending bill a disgusting abomination. Does this spell the end of the beautiful Trump-Musk relationship?
Hello and welcome to your halftime report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Manglam Malu. Well, it is definitely turning out to be a very range day for us in today's trading session. So we just about have the Nifty as well as the Sensex and the mid-cap index trading just about marginally higher at this point in time. But a lot of stocks in focus. So for example, we have Bharti Airtel, which is buzzing on the back of a brokerage note. We have SPARC, which is down and out in today's trading session. So double-digit losses which have come in for that one. And AstraZeneca, do watch out for that from the broader markets, is still showing an up move in today's trading session and has gained significantly on a week-to-date basis. So a lot buzzing around in terms of specific stocks, defense stocks, shipbuilding stocks, for example, also in focus. So a lot to track in terms of specific stories. But overall, the index just about trading with a little bit of green at this point. We do have the MPC meet, which is beginning today. So that would be something to watch out for in terms of Q come Friday.
Most definitely, Ekta. In individual stocks, it will look like portfolios will feel a lot happier in today's trading session. Why do I say that? Because you have not only the shipbuilding stocks at the start of today's trading session that did well. You had, Garden Reach Shipbuilders, Cochin Shipyard, all of them buzzing, closing on the heels of that sort of gain coming in. We had all the rail stocks take off as well. So pull up something like a Railtel, which is up 9% in today's trading session. We have RVNL, which is doing extremely well. You have RITES and Titagarh Wagons. All these stocks which are spiking. And remember, this comes after a big jump that we saw in all the defense stocks as well. So the themes that did well all of last year and made portfolios a lot, heavier are the ones which are returning. So we had defense stocks which, started to rally post the skirmish between India and Pakistan. Thereafter, we have these shipbuilding stocks which are doing well. And now a lot of order wins coming in for rail equipment companies. And we have Aircon, Railtel and the likes doing even better in today's trading session. That's not all. We also saw some gains come by in a couple of these names which have been beaten down. Now, yesterday we told about how Morgan Stanley has initiated coverage on Swiggy and they have a target price of 405 on the stock. Yesterday, the stock was slightly subdued in trade, though higher was, off highs. But now as we speak, Swiggy is taken off as well. It's up 6%, giving the company on the way up. At the high point of trade is its other compatriot, which is Eternal. Post the liquidity event is over for Zomato. So Eternal has moved higher as well. And not too far behind is the other quick service restaurant player, Jubilant Food, which too has recovered from the lows currently at the higher end of today's trading range so far, with a gain of about 2% on Jubilant Food. But let's talk about the stock which is lower today and lower in double digits. We have Sun Pharma Advanced Research, or SPARC as we know it, as one of its key molecules failed to meet the primary endpoints, Ekta.
Yes, absolutely. That's the reason that you're seeing the disappointment come through for SPARC. For Sun Pharma, not that much because, it's a small part of their business, but this is a big part of SPARC's business. So I'll just tell you what the news is that Sun Pharma announced the top-line results for the phase 2 trials of SCD-044, which is basically a molecule under development. It is being studied for psoriasis as well as dermatitis. The drug has not met primary endpoints in either study, according to both the companies. So it's not working for psoriasis, it's not working for atopic dermatitis either. Now, the development of this particular molecule is now going to be discontinued. There's no further clinical trials planned, and they will be assessing the next steps for the compound. Overall, how exactly is Spark impacted? Like I mentioned, for Sun Pharma, this is a small part of their specialty pipeline. Hence, it does move the needle, but it doesn't really shake things up for them. For Spark, on the other hand, they had licensed the molecule to Sun Pharma. The phase 2 results were due in Q4 FY25 or Q1 of FY26. The stock ran up over 75% from March to June of 2025 in anticipation of these results. So that's the kind of build-up that the stock had seen. Analysts say that is one of the more advanced molecules in their pipeline. So what is one going to watch out for when it comes to Spark? Other molecules in their pipeline such as SCD-153, SBO-154. They're also looking at cost cutting. They're looking to cut their manpower, for example, by 30%. And they have indicated that the available debt and cost optimization would provide a runway for them till May of 2025. That was as per their December 2024 presentation. And the expected milestones as of then were expected to defer the imminent need for fundraise. So maybe they were talking about, some kind of milestones coming in from these molecules as well. So what happens in terms of funding requirements is something that will be a key monitorable. The stock overall is down 35% from its 52-week high, which it hit in July of 2024.
All right, so that is about Spark, which is lower in today's trading session. But what's keeping the street abuzz is a bunch of block deals. Yesterday we had about 5 and today we have about 5 as well. Vivek joins in with all the updates. Vivek, a lot of paper coming into the market.
A lot of paper, a lot of equity supply, and that is what is keeping the street quite active. Yesterday we saw 4 large block deals. Even today, 4 large deals have taken place. Earlier today, both our colleague Nimesh and myself highlighted the possibility of quite a few blocks and along expected lines. The first on the list is AB Fashion. Remember, this is the demerged entity. The other demerged entity is still yet to list. So today, Flipkart, that had a residual 6% stake in AB Fashion, exited the entire stake and a little over the 6.2% stake and over 600 crore worth of equity changed hands. The other stock on the radar was Indegene, very interesting deal over here. Pre-IPO equity, private equity investor Carlyle, through its CA advisors, actually has gone ahead and sold the entire 10.2% stake that it held in the company today. We accessed the term sheet last evening. Tata Technologies, again, remember, at the end of March quarter, TPG Rise, one of the large investors, held almost 6%. April, they offloaded close to 4.9%. And within a month, they've gone ahead and offloaded another 2.1% equity. So this too is a clean out trade, as far as Tata Technologies is concerned, from TPG Rise. And lastly, Alchem Labs, promoter continues to trim stake. This time it's promoter Jayanti Sinha that's gone ahead and sold a little over % stake in today's block deal. And again, this particular stock on account of promoter trimming stake today is under significant pressure.
All right, Vivek, thanks a lot for that. So those are a bunch of stocks on our radar on account of paper supply that is coming by. Just keep an eye out on PI Industries. That's now moved to the high point of trade. Remember, this morning we got news from one of its biggest client, Kumai, who said that they've upped their growth guidance, 9% revenue and 34% EBITDA. This 2 quarters after they had lowered their guidance as well. So the stock has been on a volatile ride, but optimistic outlook by one of its biggest clients takes the stock past 4,000 rupees, up 5% as we speak. But let's take a short break. And before we do that, we're excited to tell you about your favorite global business news channel, the all-new CNBC-TV18 Prime, which is our latest offering. It brings you insights from policymakers, business leaders, and economists who shape both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. all weeknights. We're back. We are seeing some traction in SBI cards that's moved higher. Berger Paints is the other one which has moved higher as well. And we have IGL along with HFCL. A couple of these F&O names doing a lot better. Markets also picked some pace. The Nifty is above the 24,600 mark, though it wasn't trading much below that anyway. But as the markets moved higher, just keep an eye out on the volatility index. That's moved lower, down 5% right now for the India VIX. below 16, and that's a positive given the sort of events that we have over the next couple of trading sessions. Tomorrow's the weekly options expiry, and day after is the RBI policy meet. But cement companies, they're in focus in today's trading session. There's a note that has come in from Jefferies, which is a positive note on the sector. Nigel's joining in. Nigel, typically ahead of monsoons, we don't hear much positivity about cement, but here's a note.
Well, that's right, Manglam, but actually 2024 was such a weak year that the fourth quarter of FY25, in fact, it looked much better. And that's why Jeffrey is pointing that out as well. They're saying that the cement universe that they are covering, it delivered a solid showing in quarter four, and there's a big rebound that they saw. Let's give you a few more details. They're talking about quarter four EBITDA number. The absolute number was up by close to 11% on a year-on-year basis. Keep in mind that pricing was still weak. And on a sequential basis, it was very, very good because that was a growth of close to around 60%. What helped them? Mildly better pricing, a bit of an uptake in terms of volume, and growth outlook as well should be fairly better in the coming year. They also go on to point that quarter one FY26, we'll have better pricing, particularly in South India, which, where pricing has been absolutely smacked and has been very, very disappointing out there. So quarter one for South-based companies actually will look relatively better. They believe that the profitability for the sector itself will turn around in FY26. So prospects getting into FY26 are far better. And finally, they point out the top bets that they have in the sector. Ultratech Cement is something that they like, Shree Cement as well as JK Cement. Those are the top picks that they know. So Jeffrey is acknowledging that quarter four after a while saw good improvement in the cement numbers. And they're saying, particularly for quarter one onwards, we'll have the South-based companies that will benefit from the price hikes that were taken at the start of the quarter. Back to you.
Okay, all right, Nigel. Thanks very much for that. That's on cement. But let's move forward to Garden Reach Shipbuilders, which is in focus after signing an MOU or a Memorandum of Understanding with a Norwegian company. Ria is here to tell us more about it. The stock is up 6.5% at this point. Ria.
Well, yes, GRSE is in focus today after signing an MOU with Norway's Kongsberg to build India's first PRV, indigenous PRV, which is a polar research vessel. Now, the National Center for Polar and Ocean Research is going to use this vessel for research activities in the polar and southern ocean realms. And at the signing of this MOU, Union Minister Sarbananda Sonowal had held a roundtable with Norwegian ship owners, and he has also invited investments in India's maritime sector. He has said that Indian shipyards currently hold about 11% of the Norwegian Shipowners Association order book, and he has also urged for further expansion of orders in the shipbuilding sector. Now, coming back to what this spells out for GRSE, the order value for this PRV has not been disclosed yet, but GRSE's current order book is very healthy. The current order book, including the recent order for the next-gen Corvette, stands at about rupees 47,680 crores. And on the back of this, today GRSE is up around 6.5%. And it's up almost 76% in the last 1 month as well.
All right, that's about GRSE. And typically, one good news for one company sets its color on others as well. And we're seeing the entire shipbuilding space buzz around in today's trading session. But among the top Nifty gainers today is Bharti Airtel. Rima joins in for a quick brokerage update that is coming on Bharti Airtel. Rima.
Thanks. So Macquarie is bullish on Bharti Airtel. Their target price stands at 2,050, though in the bull case, the target price is as high as 2350. And Bharti also features in their Super 6 as a core idea. So what Macquarie has done, it's listed out 3 scenarios. In the base case, they see the ARPU, that's the average revenue per user, rising to 290. In a bull case, they see the average revenue per user rising to about 300. And then they've assigned probabilities for each of these scenarios. In all scenarios, ARPUs increase. The current ARPU is about 240, so it goes up ranging from 275 to 300. The base case, they're assigning a 50% probability. For the bull case, they're assigning a probability of 40%, and the target price in the bull case is about 2350. In the bear case, the target price is, lower. Also, the company, Macquarie says that there are catalysts on the horizon. Of course, in the near term, the driver for the bullishness is the free cash flow, how it's improving, the tariff repair. But they're saying the Jio's potential listing will be supportive for sector multiples. So that will be a key trigger to watch for Bharti Airtel. So for now, outperform call, target price 2,050. But they also see a bull case where the target price for Bharti is as high as 2,350.
Okay, as high as 2,350 in terms of the bull case for Bharti Airtel, which in fact is the top gainer on the Nifty today, so up around 1.8%, currently standing at around 1,874 odd rupees. PI Industries is the other one which is surging in trade after one of its major customers, Kumai Chemicals revises its outlook. Ria is back with us to tell us more.
Well, yes, PI Industries is in focus today. The stock is higher. It's jumped up almost 5% after a major customer called Kumai Chemicals has revised its outlook for the year ending October 2025. They've revised the revenue outlook upwards by 9% and the EBITDA outlook by 34% for the year. Now, remember, Kumai Chemical is the biggest customer of PI Industries, and back in the March quarter, the results were quite good for the company as well. It was better than street expectations. Sales were up around 10%. Operating income was also up around 36%, and even the net profit had jumped up by around 61% compared to the same quarter in the previous year. But back in May 21, PI Industries had reported quite a weak set of numbers. The stock was under some selling pressure after weak numbers in quarter 4 and weak guidance as well. The company had guided for single-digit growth for its CSM business for FY26, which was below street estimates. But today, of course, after this new development, the stock is up around 5%.
Right, Ria, thanks a lot for that. So that's about PI Industries up around 5%. What we'll do is take a short break. Before we do that, pull up the intraday chart of Quick Heal. That's the one which has seen a decent up move as well. It's obviously halved from the top, but at current reckoning, it's seeing a near 15% jump with some volumes backing it as well. That's the one. And yesterday we had spoken about Dodla Dairy doing well because, you know, dairy companies have taken a price hike already because of the flush season. Milk prices have come down. But today, look at Heritage Foods. That's the one which has moved higher as well. Again, like shipbuilding stocks, like rail stocks, dairy stocks too, move in tandem. And that's something that we're seeing. Yesterday, Dodla Dairy did well. Today, we have Heritage Foods. Take a short break. On the other side, we have Pritesh Mehta of Yes Securities joining in with some trading strategies. 250 points higher for the mid-cap index, currently at the high point of trade with a near 50% outperformance of the advancers than the decliners, and that's a big positive. So let's take note of what the market setup looks like at midday. You have the Nifty and the Nifty Bank along with the mid-cap index doing a lot better. So you have the Nifty Bank, which is actually not gaining as much as the frontline index, and that's something we need to keep an eye out on. The Nifty is above the 24,600 mark at a time when the volatility index has cooled off. So we'll monitor this index more than any other, largely because of the two events that are lined up in tomorrow's trading session. The advance decline, we've been speaking about it. Nearly 1,500 stocks advancing for about 1,000 stocks which are declining. And despite the underperformance of the Nifty Bank, we have the IT stocks and the metal stocks which are actually outperforming and supporting the cause of the frontline index. Add to that, we have the Nifty Bank, which is limited in its decline by HDFC Bank's outperformance. So if HDFC Bank continues to outperform, maybe we see a revival of the Nifty Bank as well. And if these three indices are doing well, then maybe there could be a big pop that we would see over the next couple of trading sessions. Why do I say that? Because one, the FIs are heavily short in index futures, and there is a lot of call writing at 24,600 as well. So if the Nifty were to go above that 24,713 mark, which is the 20-day moving average, then these call writers will have to cover their positions. We've seen beginning of that at the 24,600 call. And as we see 24,600 call writers unwinding their positions, we are seeing increased writing at the 24,600 put and the 24,500 put, telling you that the support has come higher as well. A lot of individual stocks seeing a lot of long positions being added. APL Apollo is one of them. SBI Card is the other one. We pointed that out. 1.9 million shares traded hands on that. RBNL is the other one. 24 million shares trading there. 7% higher. Fresh long build up there. And we have Chola Invest and HAL, which are the only ones which are seeing some short build up. Just keeping an eye on two stocks which may enter F&O ban, if not today, then over the next couple of days, given the sort of up move that we've seen in their open interest. AB Fashion and Retail is one of them. There was a large trade today, so as a result of which the open interest has crossed past the market-wide position limit. And we have Chambal Fertilizers as well, which has seen a rapid jump in open interest, which may put the stock very close to the ban limit. So these are the two stocks which I'll watch out for as they go into ban.
Okay, all right, Manglam, thanks very much for that. Definitely buzzing around there. Pritesh Mehta now joins in to discuss the technicals of the market. Pritesh, hi, welcome to the show. Well, it's definitely a day where we are seeing some action on the upside, but how would you approach it in terms of specific stocks? Mid-caps doing better.
Yes, good afternoon. Now, see, I believe that as far as my Nifty is concerned, we are in a period of hibernation, and nothing is wrong with that. After the kind of rally that we had since the low of April, I think the index is taking its sweet time. It's moving in a narrow range. Intelligence tells us that the breadth of Nifty is weakening, but the breadth of bank Nifty is improving. In this kind of scenario, we are unlikely to have any kind of bigger move on either side. So I think market is going to take conservative in the range of 500 points and unlikely to provide any bigger move in the next couple of weeks also.
All right. And individual stocks, what are you betting on today?
So yes, pharma stocks have been selective participating in this rally, but DB labs have caught our attention. So, we have seen a series of bullish anchor column, since the first week of April. Thereafter, we have seen bullish follow through, double top buys, turtle breakout coming in. So buy for a target of 7200. The stop loss would be around 6000. So the second one is Canada Bank. In fact, when we look at the Nifty PSU Bank Index, this quarter, this particular space has rallied by 13%. And, this stock, Canbank, is outperforming PS Bank Index. And when we talk about the structure, we can see series of bullish anchor, columns being plotted on the chart. And we can see follow-through moves coming in. So buy for a target of 132 and stop loss would be around 112.
Okay, just quickly, Pritesh, I wanted your thoughts on two stocks. Spark, which has fallen 15% today. In fact, it's at the low point of the day as we speak. And Orchid Pharma, which has picked up around 15% this week, but is down 60% year to date.
See, when we talk about these kind of counters, yes, mid cap and small cap have been buzzing for a while now. So, I won't be so much keen within the pharma space. We like to stick with the large caps that we have been making that have been making noise. Something like Cipla, DBs that we highlighted. This is a stock that we would be concentrating, but we would be avoiding these small cap and mid cap stocks.
All right, you'd be avoiding the small cap, mid cap stocks. So let's talk about the biggest cap of them all. Pritesh, thank you so much for joining in. We're talking about HDB IPO. HDFC Bank is the parent. Ritu joins in to tell us a little more about that. Ritu.
Well, SEBI has finally greenlit the much-anticipated 12,500 crore rupee public offering of HDB Financial Services, marking one of India's biggest public issues this year and one of the largest by any NBFC in recent times. Now, the IPO comprises of 2,500 crore rupees of fresh issue and 10,000 crores of offer for sale by the parent HDFC Bank, which owns more than 94% stake in the company. But even after the IPO, HDB will continue to remain a subsidiary of HDFC Bank. Now, the listing is not just strategic, it is also regulatory because HDB has been identified as an upper layer NBFC by the RBI, and that mandates a public listing by September this year. Also, if RBI's 2024 draft norms on overlapping financial services are enforced in the current form, HDFC Bank may need to cut its stake to 20% in HDB or merge operations or so on. So that's also a potential uncertainty to watch out for. Now, the IPO proceeds will be used to bolster the company's Tier 1 capital, support future lending and so on. Keep in mind, HDB Financial is the first HDFC Group company to go public in nearly 7 years. It has more than 1680 branches across India, a diversified loan book primarily in the retail and SME segments. Now, Macquarie Research estimates that at a listing price of, let's assume, 1,000 rupees, HDB Financial will trade at an FY26 price to book multiple of 3.7x. That valuation could rise to 4.8x at 1,300 per share price and so on. Now, if you look at the key strengths, of course, the strong strategic and operational linkage with parent HDFC Bank, as well as the well-established presence in granular retail lending and a diversified funding profile and comfortable capital structure, but it does have moderate asset quality with exposure to unsecured and riskier loan segments as well.
Okay, all right. One of the more high-profile IPOs that we can expect, Ritu, this year and has been pending for a long time as well. Thanks very much for that. We'll take a short break, but we'll get you a lot more on the markets and stocks once we're back. Stay tuned. Welcome back. Well, quiet times for the market at this point in time. We have the Bank Nifty, which is down around just about higher by around 64 odd points. We have the Nifty, which is higher by around 51 odd points at this point in time. We've been talking about specific stocks. So Indegene, for example, is in focus on account of that large trade taking place. But besides that, a couple of other stocks which stand out in today's trading session on volume as well as pricing include, Vodafone Idea, which is just about higher by around 0.5%. Yes Bank, which is up around 0.6% at this point in time. But let's now cut across to Shireen. Okay, we'll just about get back to the markets in just a bit. A couple of other stocks, which are in focus, Manglam, includes even something like an Eternal, which is buzzing around. That one is up around 2.6%.
So that explains why Eternal is up, because our, sister concern Money Control has put out a story saying that Zepto has deferred its IPO plans to next year and they are tapping private funding. So if that were to happen, then, it's a positive sentiment rub-off for Eternal and Swiggy, which explains why these stocks are doing a lot better. Though, we'll get a lot more out of, this or on this story in just a bit. But as promised, let's cut across to Shireen, who's in conversation with Zerodha's founder, Nitin Kamath.
Well, thanks very much, guys. It is that time of the year when entrepreneurs from the world gather in Monte Carlo to compete for the title of the World Entrepreneur of the Year. This year, we have 43 finalists from 43 countries competing for the title of the EY World Entrepreneur of the Year 2025. The winner will be announced on Tuesday night in Monaco. And representing India as the India Entrepreneur of the Year is Nitin Kamath, who won in India for Zerodha's transformational impact on changing the landscape for retail investing, becoming one of the top brokerage houses in the country and democratizing financial inclusion. Joining us now is Nitin Kamath, all the way from Monte Carlo. Nitin, congratulations once again, and many thanks for joining us here on CNBC-TV18. I would imagine that this is a different moment for you because you're used to being awarded, but this is not just an award for Zerodha. It's also Nitin Kamath of Zerodha competing for India on a global stage with 43 other entrepreneurs from the world over. Nitin, explain to me how you feel today.
No, thanks, Shireen, for having me on this. No, I feel good. As in, yesterday we had like one of these group discussion types, so I felt like I'm back in some school or college, so I haven't done that in a while, so.
Yes, I would imagine that it took you back to school. But Nitin, part of the story that you're going to be telling there at the EY Entrepreneur of the Year Awards is the Zerodha story, the last 15 years, the journey made, the impact created. Explain to me, as you look at what you've been able to establish, what you've been able to achieve, if you could highlight the key milestones of the impact, but more importantly, as you look at India today, what the aspiration for Zerodha now is over the next 15, 20 years.
Yeah, I mean, I would say, starting Zerodha itself was critical because, there was very little money on the table. Then I think 2015, when we launched an in-house product, which was called Kite. Then 2015 December, when we went zero brokerage on equity investing. Then the real tipping point in the business was 2016, when Aadhaar for online onboarding started. And then 2020, of course, COVID. The kind of the growth that COVID brought us was just immense. So there were many tipping points in this journey. So I guess, these were the few. So.
Well, speaking of tipping points, Nitin, you've been very transparent about the growth trajectory of the business as well as of the industry. So when we last spoke, you had spoken about how the 7 regulatory changes were going to have a material impact on both profit as well as revenue. As we look at the picture today, for FY24, that's the disclosed number. Profits are up 62% at 4,700 crores, revenues in excess of 8,000 crores. What have you been able to hedge in terms of being able to bring down the regulatory risk as an impact on the business? And what do you see today as the hit on the business on account of those changes?
In terms of, we started our MTF business last December, which has grown significantly, which is around 3,000 crores of book size. So it kind of cushions some of these, some of the losses from the options trading business. But that said, the hit is still there, So I guess we would have done all right if we did a flat year this year, from the operations of broking. As in the overall business, should be still all right because we do some treasury operations and also and it's until last October until December is like not bad at all. So overall business should be all right, but broking business as such, I think, will still be down like 10-20%. But that said, we are kind of investing into other startups, and these startups have now maturing. So like there's insurance startup, there is AMC, etc. So I guess it has to be given some time for it to materially start impacting our revenues as such.
You said broking is going to be down by about 10 to 20%, but overall you're still hopeful of this being an all right year. Can you qualify what all right means, Nitin? Just to give us some color on how we should read all right as far as the business is concerned, outside of the 10 to 20% drop that you expect on the broking side.
No, I mean, see, the thing is, we were kind of expecting the markets to go down, especially, since whatever was happening to the first quarter of the year. Now that, it kind of seems like that was like a near-term bottom. So the business has picked up, because our business is directly proportional to the activity in the markets. Based on how the markets behave. So markets are behaving well. So that's why I said, it should be all right and not a dreadful year.
Okay. You talked about the margin trading facility book, which has grown to about 3,000 crores since the launch 6 months ago. And this, you believe, has been a hedge as far as revenues go, given the regulatory changes that you've seen. What's the expectation now? I mean, if the markets continue to trade as they are, which again have belied your own expectations, what do you believe this book size could be?
I think we should be getting to 10,000 crores by the end of the year or the financial year. So, and 10,000 crores we potentially could negate any kind of any impact due to the regulatory burden on transaction charges not being the pop not being to the brokers, and the option trading volumes drop. So at around 10,000 crores, we should be kind of, okay in that.
Okay, so margin trading facility, the book should be about 10,000 crores by the end of the financial year, mitigating some of the impact and offsetting the impact of some of the other changes that you spoke of. But, Nitin, you haven't changed brokerage rates and there's been no change on the DP charges as well. Again, on account of what you've been able to do on the margin trading facility side, do you believe that that will remain? I mean, the status quo there stays?
Yeah, I mean, for now there's status quo. We had thought of it the same when we were launching margin trading funding. The whole point was to see if we can somehow recoup whatever is the revenue outgo because of the regulatory changes. So that's happening. So I think the brokerage rates will stay where it is. The brokerage rates, DP charges, and all of that will stay where it is. And we haven't changed this in the last 15, 16 years. So in a way, we want to be like that. We want to be, people should have predictability in terms of how much they charge, so yeah, that's good.
So no change there as far as the brokerage rates are concerned. But Nitin, overall, as far as the inflection point from an Indian market perspective is concerned, you detailed some of the big changes and some of the milestones that we've seen, which has seen more investors come to the markets. As you look at the story today, as you look at the picture today, what's your read on where we could potentially be? I mean, you have about 8 million active users today, or around that much. What do you believe that number could potentially be, given the concentration of the equity culture, given the diversification of the equity culture in India today?
Yeah, I mean, we hope that the participation will increase. So we have 18 million customers. We have around almost 9 to 9.5 million people who have stocks in their demat accounts with us. And we hope that this market participation will keep increasing over time. Of course, the speed at which they increase will kind of you can't expect the same speed which we saw in the last 4 or 5 years. So long term we hope to compound this at around 15%. I mean, in terms of market participation, and if we do that, that'll be good. And not just for us. It's basically across the brokers.
Yeah, 18 million accounts on the Zerodha platform. But Nitin, speaking of potential changes, and this is something that we were discussing in our newsroom, and I'm going to put this out as an idea for your thoughts. Do you believe that the time has come to look at increasing the LRS limit of $250,000 at this point in time? Do you believe that that will give Indians the options to diversify the way that they invest? Do you think that that would potentially be an idea that you would back and support?
I don't know if increasing LRS will really mean increasing market participation. LRS is like $250,000 right now, and $250,000 you basically will have to go to the top 0.5% of the population to increase that. And so LRS, I don't know. I mean, of course, we would be supportive in terms of any regulation. I mean, any kind of regulation which will reduce increase the LRS limit, and more importantly is to not have the tax at source when the money is sent abroad. So we'll support that for sure, but I don't see how market participation overall will really increase because of that.
Nitin, let's talk valuations, and I think that debate, of course, perennially continues. Are we pricey? Are we cheap? What's your take at this point in time? Where are you on the valuation spectrum?
No, I mean, given the uncertainty around, with AI and all of that, I think we're probably fairly valued. So. In terms of all the sectors, because uncertainty has to be factored into the price. It doesn't seem to be factoring right now.
So you're saying uncertainty hasn't been factored into the price?
Yeah. I just tweeted about this. The pace at which the AI is compounding is really. It's ridiculous. So and you don't know where the markets will be in the next 1, 2, 3 years. So given that all the uncertainty, it has to be somehow factored into the price, and it doesn't seem to be, and not just in India. It's even globally. So globally, all the markets are kind of. Taking it, pretty easy, I guess. So.
Well, it certainly does seem to suggest so. Of course, the degree of uncertainty depends on how many times we see President Trump tweeting in a day. But Nitin, let's talk about the next course as far as Zerodha's journey is concerned. You talked about the AMC business, the insurance side of the business as well. I know the aspiration of a bank license continues to be a hope. But whether or not that eventually fructifies into anything is a different story altogether. So given where you find yourself today, what could Zerodha potentially look like over the next decade or so, in terms of diversification, in terms of the kinds of investments that you're likely to make, the bets that you're likely to take?
Yeah, I mean, since we started Rainmatter in 2016, the idea has been to partner rather than try to build everything ourselves when working in adjacencies. So, and Rainmatter as an initiative is almost like 120, 130 startups now, part of the portfolio. We're doubling down wherever we see any kind of traction. So apart from insurance, which we partnered Ditto to do, or AMC, which we have partnered Small Case to do. The NBFC is in-house, so we are essentially doing only loan against securities. Like this, as in. But the thing is, for a lot of these companies, we're probably in the first 3, 4, 5 years of the business. Like the first 3, 4, 5 years of our business was spent trying to prove that we are real for all our customers. So I think while these companies have it quite easy that they have us for distribution, but still, as in, it takes a while to build trust and credibility as such, and so in 10 years from now, we would want to be a full-fledged financial conglomerate as such, so and hopefully banking will happen somewhere along the way.
A full-fledged financial conglomerate, and you're still hoping that a bank license could potentially come your way. You're not giving up on that. But, I want to talk about one of the other investments that you've made, picking up a stake in the Metropolitan Exchange. Do you believe that there is room for a new exchange in India today between the NSE and the BSE?
Yeah, I mean, see, the thing is, I think there are segments, like there's, for example, a debt segment in which both the existing exchanges aren't, kind of really focusing on because of, in terms of it, it's not very it's not very easy in terms of revenue generation and all. So I think, this exchange will have to kind of take the hard way out, and which is to build the liquidity in markets, like debt segment, for example, or mutual funds and etc. So and then hopefully in the next 5-10 years they'll have, we'll probably have another exchange.
So you feel confident of that?
I mean, it's confidence is there, but I don't know. As in, I don't know if it will really play out that way. As in, we have to see how the other exchanges also react to it. But India definitely has an opportunity to be in to have at least 3 exchanges, soon.
India has the opportunity to have 3 exchanges. But Nitin, the much asked question, and I want to know from you at this point in time, any change at all in the thinking on whether or not you intend to, at some point in the future, IPO? I mean, just about everybody, including your own competitor, is heading in that direction. Any change of heart, any change of mind there?
No, not at all. Because, as in, the problem still remains the same, which is we have enough cash to do whatever we wish to do. and I feel that being listed on the exchanges is kind of tough to, for a company like ours, it's kind of tough, because a lot of times what is right for the investor isn't really what is right for the customer. Like, for example, customers trading more is right for the investor, but it's not really right for the customer. So I don't know, as in we're still caught up in all of this. So so for now, that's how we're staying, So.
Welcome back. Well, for the markets, it's definitely quiet. So we have the mid-cap index, which is up around 0.3%. Just want to point out that a couple of specific stocks continue to stand out. RVNL is up around 7.5%. Good volumes traded on that one. Jupiter Wagons also is up around 5.5%. And watch out for something like a PB Fintech, which is up around 4.3%. Even Aster DM from the hospital space is doing well. So that stock is up 4%. Not done much this year. But nonetheless, it's been a marginal gain of around 12% this year. But overall, it's doing well today. Toll Tires also seeing some amount of traction on the upside, but not great in terms of volumes. That stock is up around 4% at this point. But now let's go across to Manisha for a roundup on all the action from the commodity market.
Well, I'm looking at metals which are trading under some pressure, and the max pressure really seems to be coming in for the steel rebar prices, which are trading at lowest since August 2024 right now. Well, there are concerns, one, about the Chinese economy outlook, where we have seen Chinese manufacturing PMI data come in at 48.3 for the month of May, which is the lowest since September 2022. Apart from that, Trump signing 50% of tariffs on aluminum and steel also seems to be doing some damage here. The tariffs have been increased from 25 to 50%, but they continue to be at 25% for UK because there is a preferential trade agreement that we've seen happen between the two countries there. Well, markets also are looking at weaker demand coming in from China, because China has said that they are looking to not allow the builders to pre-sell homes, and that perhaps could impact the prices and, of course, the demand for many of these metals. Now, 25% of all steel actually used in US is imported, and 50% tariffs are expected to hit Canada and Mexico the hardest, because when you look at the kind of import US does, well, 23% of steel comes in from Canada, 16% from Brazil, and 10 to 12% from South Korea and Mexico as well. Aluminum prices also have continued to see a bit of a decline. If you look at the prices on LME, we have seen a decline after this 50% tariff. But when you look at the aluminum prices in US, well, if you go out to buy aluminum in US today, you suddenly have a price jacked up by 58%. That is where you are looking at a price disparity there. And also seeing a decline is the iron ore prices. They are trading at around 8-month lows right now. Markets also are looking at a lot of pressure continuing in case of nickel, which is trading very close to its 4-year lows. There are oversupply concerns coming in from Indonesia. And even as Indonesia is trying to handle it, they have cut their mining quotas by 120 million to 150 million tons right now. But with weaker demand and much inventory and a lot of reserves is something that continues to put pressure prices there as well. What the street will watch out for right now is the US non-farm payroll data that comes in on Friday, and will give a lot of cues really to various asset classes, including metals.
Okay, all right, Manisha, thanks for that. And on that note, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.